Hi, this is the update video you have been waiting for. The market is crashing, Bitcoin is at 46k, temporarily we have seen the 43k even, and all kinds of altcoins, they are bleeding. Interestingly enough, the altcoin we discussed yesterday, Filecoin, is one of the major losers, 24% losses within 24 hours. And so the obvious question is this going to continue? Are we going to bounce back up, or are we in for a major correction in Bitcoin, in Ethereum, in altcoins? Now let's first look at this crash here. It's very interesting how this crash actually happened. If we zoom out a little, we can see trading volume was comparatively low, and this crash happened all of a sudden. Here, look at this. This is the 1 minute chart. Within 1.5 hours, we fell more than 15% in Bitcoin. And Ethereum is not that different. Ethereum lost almost 20%. And it's interesting how much trading volume spiked up during this time, right? We kind of like broke a support over here, a trading range where we have been in for around 1 week. We have broken that support, and this then resulted in a cascading sell-off. So it very much looks like this acceleration here of losses, this incredible spike over here, it happened due to forced selling. Because who's going to sell at this point? After such a crash, so much trading volume, who's going to sell here? It's mainly people that have to sell. And so it started due to losing this support over here, but it accelerated due to forced liquidations. Now it looks like we are again in some kind of trading range, more or less in the middle of that trading range. And so does it make sense to buy right now at $3,420 roughly for Ethereum, at 46k for Bitcoin? Does it make sense to buy now and hope to quickly gain 11% or so? Now, if you have been following this channel for a bit, you're familiar with the 23 and the 39-day moving average. So the 23 is here in light blue. That's the 23 moving average. In dark blue, we've got the 39-day moving average. And I very much like to look at these because they do help quite well in timing the Ethereum market, and due to high correlation, obviously also timing altcoin trading. Because you don't want to be in altcoins when Ethereum itself is falling, right? There's probably not a single altcoin that made US dollar gains during this period. So you want to go risk on in altcoins when general momentum is positive. And the reason why I look at the 23 and the 39-day moving average is because, historically speaking, those two moving averages, they work the best for Ethereum. I basically started this channel presenting this strategy. The idea is that you are outside of the market whenever the price of Ethereum is below the moving average. So what you can see here in white is the price of Ethereum. What you can see in purple is a moving average, and what you see in gray is the portfolio line. And so the idea is when the price is below, then we are completely in cash, we are completely in stable coins. When the price, however, closes above the moving average, then we follow the market, we are invested. And so with this strategy, you have a timing strategy for the market. You avoid the big losses in a bear market, you are mainly in cash, but you're still able to make gains during times when we are bullish. And so you can backtest this strategy. You can try to find out which moving average actually works the best when you trade according to this idea. And what you find out is that the 39-day moving average and the 23-day moving average, those two, they tend to work the best. Here's an overview of all the moving averages that I've backtested. If you bought and held Ethereum, you would have quote unquote only made 56% per annum during the test period. You would have experienced a maximum drawdown of more than 90%. So from the top of your portfolio line to the bottom, you would have experienced a 90% drop down. But then when we compare this to trading according to the moving averages, we find out that the 23-day moving average works pretty well. So instead of 56% per annum, we would have gotten 166% per annum. And the drop from the portfolio line, top to bottom, is also much less, only 47%. So the 47%, it refers to this movement over here, right? From the top to the bottom. It's way less nerve-wracking to be in the market when you lose 50% instead of 90%, right? Recovering from 90% is pretty hard. You need to get another 10x just to be back to your initial investment. If you lose 50%, however, you only need a 2x. So you want to avoid these extreme losses, and that's exactly what this strategy is doing. So the 23-day moving average works well. The 39-day moving average works well. All of those backtests, by the way, are done without considering any trading fees, without considering any slippage. So this is really pure signal strength. It's trying to find out what moving average predicts the market the best. And so here we are back again with the Ethereum chart, looking at those two moving averages, and currently we have not yet broken either of those moving averages. So this is positive news. What I don't like, however, is how quickly we are approaching this moving average, right? We had once broken this moving average on the 26th of August, and everything still looked bullish to me at that point. I wasn't selling anything because we are still moving sideways, basically. And so when you've got two moving averages that basically work more or less the same, and we are only crossing one of those moving averages in a sideways movement, it doesn't look too dangerous, right? But if you're approaching this moving average with a crash, similar to what happened in May of this year, where we went down 20%, then this can be relatively scary, right? From this point onwards, we dropped another 47% or so. So this situation is not as obvious as the 26th of August. This can potentially be pretty dangerous. But we haven't yet broken any of those moving averages, so I'm still cautiously optimistic. But on the other hand, I do think it makes sense now to set stop losses, or at least to set an alert and sell the riskiest altcoins in case we fall below a certain level. And that level is our support line here. The resistance we saw before, pretty much around $3,350. We have traded around this for quite a while. In theory, there's also a support over here, but I don't give this too much credit, simply because if we do fall to this region over here, 3,100 or so, we are below both moving averages, and I don't want to be in the market, at least for Ethereum and for altcoins, if we are that low. I think this is not a good risk versus reward anymore. Long-term Bitcoin holdings that are used as a portfolio diversifier, that's obviously a different story. But for your active trading positions, being in the market once the price hovers around here, I think is too dangerous. And so this support line over here, where we bounced off several times before, I don't think this is too valuable. It's already too late once we reach 3,000. And so when we zoom into here a little bit, I think this support line here makes most sense. Something around this area, 3,325. And so this is now how I trade this. I am setting myself an alert right now. If we fall below $3,325, then I want to send myself an email. And if I receive that email, I'm going to sell. So we are now looking at a further drop of only 2.5%. We are basically now at the edge, from my point of view, if this bull run is going to continue or if we fall from here. I simply don't want to be in the market for another 50% drop. If you are in altcoins, that's probably not going to be 50%, but rather 70 or 80%. So kudos to you if you want to stay in the market during this time. You've got a lot of courage, but I personally think if we do fall below here, the risk versus reward isn't worth it for me anymore. I will then exit risky positions in altcoins, and I will also sell most of my Ethereum, shifting back to stablecoins. So I use USDC and simply watch what happens. Of course, these signals, they are not perfect, right? It could, in theory, happen that we fall below those moving averages and we jump back up. Anything is possible in crypto. No indicator is perfect. In fact, if we look at this in the past, this has happened several times. For example, over here, we dropped 27%, then we rose again above the moving average, below and above. And so you do have a few failed signals over here. But over the very long term, right, when you backtest this, that's why we do those backtests. Those two moving averages are the best bets that we have. Of course, you might also use other indicators, but that's at least what worked best for me so far. I have exited the market over here and I have rebought over here and over here. And so I stay loyal to that strategy. I will get out in case we can't recover here. It's simply not worth it for me to go through this roller coaster ride when there are much better opportunities out there, when you can buy, when prices are consolidating and crossing the moving averages very quickly. You don't always have to be in the market, especially in altcoins. So have your own approach, how to gauge risk versus reward. This is how I do it. And so if we do cross this support level over here, I am going to announce it in this Telegram channel, in the Bitcoin Strategy channel. You can find us by clicking the link in the video description or simply by searching for Bitcoin Strategy channel in the Telegram app. Thanks for liking the video. It will help the channel grow. And last but not least, in case you haven't subscribed yet, feel free to do so. There's a new video every single day. See you next time. Bye bye.